Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 14th, 2025, and we're diving into Accuray's recently released fourth quarter and full fiscal year 2025 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Accuray has been making waves in the medical technology sector, and their latest earnings report provides some interesting insights into their performance and future outlook.
Revenue and profitability overview. Let's start with the top line. Accuray reported a net revenue of $127.5 million for the fourth quarter, which is a 5% decrease compared to last year. However, for the full fiscal year 2025, they saw a 3% increase in revenue. John, what does this tell us about their performance?
While the quarterly revenue dip might raise some eyebrows, the annual growth indicates resilience in their business model. The decrease in Q4 revenue was primarily due to a decline in product sales, but service revenue actually increased by 4%. This shift highlights Accuray's growing focus on service growth, which is a positive sign for long-term stability.
And what about profitability?
Net income for Q4 was $1.1 million, down from $3.4 million last year, and adjusted EBITDA also saw a slight decline. However, for the full year, adjusted EBITDA improved significantly to $28.3 million from $19.7 million, showcasing their operational efficiencies and cost management strategies.
EPS forecast and analyst expectations. Analysts were forecasting an EPS of 3 cents for the quarter, but Accuray reported an EPS of 1.1. How should investors interpret this miss?
The EPS miss is certainly a point of concern, as it indicates that the company didn't meet market expectations. This could be attributed to increased operating expenses, which rose by 10% in the quarter. However, it's important to consider the broader context of their strategic initiatives and service growth, which could offset this in the long run.
Operational efficiencies and future outlook. Accuray's operating expenses increased by 10% in Q4. How does this impact their operational efficiency and future outlook?
The rise in operating expenses is a concern, but it's also a reflection of their investment in innovation and service expansion. Looking ahead, Accuray has issued a positive revenue guidance for fiscal year 2026, expecting between $471 million and $485 million. They've also completed a debt refinancing, which should provide more financial flexibility moving forward.
That's promising. What are your thoughts on their adjusted EBITDA guidance?
They've set a target of $31 million to $35 million for adjusted EBITDA in FY2026. This range suggests confidence in their ability to manage costs and drive profitability despite the current economic challenges.
CEO and CFO statements. Let's discuss the statements from Accuray's leadership. CEO Suzanne Winter mentioned advancing their strategy of innovation and service growth. How does this align with their current performance?
CEO Suzanne Winter's statement highlights their strategic focus on innovation and expanding service offerings, which is evident in their revenue growth and margin expansion. CFO Ali Pervaiz also emphasized their resilience in navigating macroeconomic challenges, which is crucial for sustaining long-term growth.
And what about their debt refinancing?
They've successfully completed a refinancing with a strong partner, which is a significant step in ensuring financial stability and supporting their strategic initiatives. This move should help them manage their debt more effectively and focus on growth opportunities.
Key takeaways. In summary, Accuray's fiscal year 2025 results show a mixed performance with revenue growth but an EPS miss. Their strategic focus on service growth and innovation, along with successful debt refinancing, positions them well for the future. John, any final thoughts?
Accuray's ability to grow revenue and improve adjusted EBITDA despite challenges is commendable. Their guidance for fiscal year 2026 is optimistic, and if they can manage costs effectively, they should be able to deliver on their promises.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Accuray's performance in the comments below.